Hey, what's up, y'all? It's Al, Rehabs Houses, and today I'm back with another video. So today I'm going to give y'all something that I think will be extremely useful as you begin to have conversations with hard money lenders, private lenders, banks, whatever kind of lender you're going to for finance. And a lot of times I talk about, or people ask me where to find hard money lenders or maybe even private lenders, but rarely do I go through what to ask these people when you find them. And the reason why that's important is because people all the time are going to lenders looking for financing and things like that, but they haven't really spent the time to know what exactly am I asking these people once I meet them? What questions am I going to ask them that kind of convey that I know what I'm talking about or that I actually have done my research and I'm ready to move forward in my real estate journey? So I wanted to give y'all 5 questions that when you ask them, they'll be like, okay, this person knows what they're talking about. They took the time to figure this stuff out. So y'all hanging there with me? These are in no particular order. You want to ask them all because they're all equally important. I'll make sure y'all click, comment, like, subscribe, all that good YouTube stuff. I'll be sure to make more videos for y'all. If it's a question that you have or something you'd like to see me cover in a video, just drop it in the comment section and I got y'all. The first one, rate. The rate is going to be the most important question you ask because that's what a lot of investors are making their decisions around when it comes to who to borrow money from. So, when most lenders speak about rates, right, they will say things like 12 and 2, 14 and 2, 12 and 3, right? It's just two numbers that are together. Now, the first one is the interest rate of what you will pay per year to borrow that money. So if it's 12 and 3, the 12 is the annual rate they'll charge you to borrow the money. The 3 is the points or origination points, which is usually something they add on to the loan. That's an additional cost that you'll be responsible for paying, typically at settlement. And an origination point is just 1% of a loan. So I like to use 100,000 because it's like a round number. It's pretty easy to understand for everybody. So let's just say you are borrowing $100,000 from a lender and they charge 3 points. 3 points in that case would be $3,000 because, again, each point is 1% of the total loan. Y'all got me on that? All right, cool. So, second question. How much of the total project cost are you willing to fund? Now, every hard money lender will be different. So make sure that you ask each one these particular questions because it'll vary from lender to lender. But I'm going to try to break it down here so y'all can understand, right? So some lenders will say, I'll fund 100% of the total project cost. Some lenders will say, I'll fund 90% of the purchase, 100% of the renovation. Some lenders may say, I'll do 80% of the purchase, 100% of renovation. Again, it just depends. It'll vary lender by lender. But the reason why that's important is because let's just say, again, $100,000 loan. Let's say that 50% of that or 50,000 of that is for the purchase, 50,000 is for the renovation. So if they say that, hey, I'll fund 90% of the purchase and 100% of renovation, that would be an extra 10% from the purchase price that you'll need to cover when you go to settlement in order to purchase that property. So ideally, you want to find a lender who would provide 100% of the purchase, 100% of the renovation. Now, I'm going to tie in the next question to this so that you have an understanding of that as well. What percent of the ARV are you willing to lend? ARV is the after repair value. So what is the property worth once it's fixed up, right? So let's say, your property is worth $100,000. Again, $100,000 is an easy number to explain from. So let's just say your property is worth $100,000 and they're willing to lend. It's usually 65 to 70% of the ARV. The better the market, the higher the percentage of ARV they're willing to lend. But normally it stops around 70, maybe a little higher, but typically 70 is the cutoff. And as the market kind of slows down or prices decrease, you may see that number drop to 65%, maybe even lower. It's just lender by lender what they're willing to lend. And pretty much they're saying, okay, if this property is worth $100,000, 70% of that is 70,000. So it's like I'd be willing to lend you $70,000 on this property that's worth $100,000. Or if it's 65%, I'd be willing to lend you $65,000 on this property that's worth $100,000. Now, remember what I just told you guys previously about, what percent of the total cost of the project would you be willing to lend? And I said that some lenders will be willing to lend you 100% of the purchase and 100% of the renovation, right? But this is where it can get tricky. So pay close attention. Now, let's just say, right, you had a property where you could buy it for 25,000 and you needed to put 25,000 into it. So you're only in it 50,000, right? But the lender is willing to lend 65% of the after repair value and the property is worth 100,000, remember, right? So the lender is willing to lend $65,000 on that property, but you only need 50 because you need 25 to purchase the property and 25 to fix it up. Now, with that being said, that lender who tells you that they're only willing to lend 90% of the purchase price and 100% of the renovation would obviously still want you to put up 10% of the money to purchase the property. But some investors, even if the amount you need is less than what they're willing to lend, so let's just say in this case, like I said, you only need 50, but he's willing to lend 65, may still ask you to put up money in that scenario. And the reason being is because lenders call that skin in the game, meaning pretty much, I don't care how good your deal is. I want you to put some money out of your pocket into this because I want to feel like you got something to risk just like I do. So no matter how good your deal is, you need to still put up some money so that you won't walk away from this property, or you'll want to get it done because you have money tied into this too, right? So a lot of times you may hear the term skin in the game. And when they say skin in the game, they mean money out your pocket into the deal. All right. The fourth question: are the payments based on a total loan or the amount that's been dispersed? Now, this is one of those questions where I say probably 8 out of 10 times it's going to be on the total amount loan, but it's one of those questions where you sound like you definitely know what you're talking about, because it's not something that most people that have never done a property or maybe done one property or so would typically ask a lender. It's like a more advanced question, right? So what that means is again, 100,000. It's just easy for me to do the numbers. I'm no mathematician, so I just like to use 100,000 as the number. So let's just say, again, your total loan is $100,000, right? And in that case, it's like 50 for the purchase, 50 for the renovation, right? So when you have that first payment due, are you paying on the total of that? So 50 purchase, 50 renovation, 100 total. Is your monthly payment going to be based on that, which would be the total amount of the loan? Or is it based on, let's say you borrow 50,000 to purchase the property, and then in the first month you only use $10,000 of your 50,000 renovation budget, right? So in that first month you only use $60,000. So is my payment based on that, which would be the amount dispersed? Is it based on the 60,000 that I actually have borrowed, or is it based on the 100,000, which is the total of the loan? So that's one of those good questions. They'll be like, oh, normally, like I said, they'll be like, oh, it's based on the total amount. But it's like, hey, this person knows something. They know what they're talking about. The last one, I actually made it 2 questions, but I kind of tied them in so I can give you a little extra, right? All right. What is the term of the loan? Or how long is the loan, right? But you may word it as in saying, what's the length of the loan, or how long is the term of the loan? And pretty much what you're asking is different lenders have different term loans. So you might have a 6-month loan, you might have a 9-month loan, you might have a 12-month loan. Those are typically the three you see the most. Now, 12 is a little more rare. 9 is more typical. You may see 12, but especially as the market maybe slows down some and things kind of slow down, you'll see some people start to throw in 6-month loan. Like I had a conversation with Belinda the other day. He has 12, he's charging 12 and 3, but he has a 6-month loan. So when you find out that loan term, the next question you want to ask them is, what happens for some reason If I don't sell a property, if I can't refinance it, whatever your exit strategy is, if this doesn't happen in that amount of time, what's next, right? So if you have this 6 month loan and you get to 6 months in a day, what is the penalty for me still having this loan after the 6 months have passed? Am I being charged an additional couple of points? Does the rate change? You want to know what the course of action is, that occurs once that 6 month time frame or 9 month time frame has been crossed, right? So those are five good questions that you can ask a lender, that again convey or tell them that you've been doing some research and you know what you're talking about. So y'all make sure y'all click, comment, like, subscribe, all that good YouTube stuff. I'll be sure to make more videos for y'all. If it's a question that you have or something you'd like to see me cover in a video, just drop it in the comment section and I got y'all. And if you want to learn more about real estate, feel free to join my free community. I'll post the link below. In there, I have some trainings and videos and checklists and forms and things like that that'll help you get started on your real estate journey. I look forward to hearing from y'all and speaking with y'all soon. Until then, take care.